G'day, I just want to share my current trading strategy. So you see here the chart, the daily chart for the Wall Street 30. It keeps on bouncing off this trend line and going up. And even if you bought at the worst time, like a high, if you waited, that was April 24, August, you get a new high. So that was on July. So it's like 2 months. April's 4, 5, 6, 3 months. You're good. So even if you buy in a bad place, you wait 3 months and you get a better price, so you're good. It's a very safe investment. I mean, no one can say that, but generally safe. So my plan is to buy the dip and get out on the peak. Yay, as everyone wants to do, right? The magic. So what I'm doing is I've got this beautiful trend line, and see here it hit it a few times there. It went past it. That was in August. I don't know what happened in August, probably a Fed rate change or something. And now it's gone past it again, so similar to that. And I'm hoping to get that bit up. So what I've been doing is following the hourly down, and it was beautiful. And I had this peak, and I was like, well, if that was a peak, and then we got a new peak, and if it goes above that peak, it means it's a reversal, because I want to get the reversal, right? So any peak, I would say, okay, if it goes above the previous peak, it's a reversal, and I want to get it. But now I've got this peak here, and there's a giant drop, which suggests to me that it's a lot more volatile than I expected. So what I've done is I've used this super trend peak as my new peak. So if it goes above that, I want to buy in, and that's my guarantee stop loss, which is already on its underneath the last low. So maybe I should move that down to this peak, because is that a peak? Is that a peak? Who knows? I mean, everything's open to interpretation. I'm playing it safe and saying it's up here, because even if I lose, this is $130. So sorry, my camera just freaked out. Let me just check the camera. Oh, good. Okay, this is $130 loss if it goes wrong. But if I make it right, then I'm getting, I don't know, $300 and something. So let me just calculate it. So this is the buy. So imagine we get it right on the buy stop, and it goes up to the previous peak. That's 2,044 pips at 16 cents a pip. It's about $330. If it goes right, if I get the last peak. But then of course, if it goes an extra 5% higher, let's see how much that would be. It's an extra 1.5%. It's an extra fair amount of money. An extra 1.5% of 2,000. How much am I investing? The answer is, so if I'm using 338 margins for 3,000, so yeah, it's going to be a fair amount of money, like maybe 400 if I'm lucky, which would be great, because my account size is 1,400, so it'd be a nice little bump. And if I lose it, I lose $130, 9% of my account. Ouch. And I've done it for Wall Street, and I've also done a similar one, but with less risk, for Russell 2000. I don't know if I'm spreading risk by just buying American stocks all the way, but it's the same thing. You've got a trend line, higher peaks, and you're good. And then this beautiful touching the trend line again, which is about to touch. And then the hourly goes down in a nice way. So I've been following. See, I had a buy stop order there, and then I had a buy stop order there, and it never hit. And then now I've got a buy stop order here. So if it hits that, I'm going to buy and catch the reversal. That's the plan. And if it keeps on going down, then I'll keep on moving my buy stop down. So I'm not going to get 100% of the reversal, but hopefully it's a safe place, so that if it ever does touch that, it means that it's going up, and it's not going to touch it and then go down and bail me out. And this one I am risking $20, which is a lot less. Thank you for watching my video, and have a wonderful day. Bye.